Today, my guest is Scott Van Hoff. Scott is a flood insurance liaison with FEMA. And in just a minute, we're going to talk with Scott about what real estate investors need to know about flood zones and flood insurance. But first, a quick reminder, if you like the show, CREPN Radio, please let us know. You can like, you can share, you can subscribe. And as always, please consider leaving a comment. And we love to hear from our listeners. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, and that's at Commercial Real Estate Pro Network on YouTube. With that, I want to welcome my guest, Scott. Welcome to CREPN Radio.
Thank you. Good to be here.
All right. Well, I'm looking forward to our conversation today. Your organization is one that everybody knows the acronym or knows the name FEMA, but not always does. I would bet that most don't fully understand what it is and how it works and all that fun stuff. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
So my education is in geology. Spent many years in school studying geology and water resources and hydrology. Worked for many years in the area and state of Idaho, doing water resource work, floodplain management work, and generally working in the area of groundwater resources. I've worked on FEMA programs for about 6 years as a state employee, doing floodplain management, and I've currently been with FEMA as an employee for about 6 years. I've worked in the regulatory building code compliance part of our program, and also now currently working as the flood insurance specialist.
Got it. Well, I'm wondering if the first place to start is what is FEMA? I know it's an acronym but I don't know. Was it Federal Emergency? Can you?
Yes, a Federal Emergency Management Agency. We are part of the Department of Homeland Security now.
All right. And what is the mission for FEMA, or what's the goal?
FEMA is a reasonably large agency. We have quite a varied mission. Our primary mission is emergency response and recovery efforts, where we help communities and states recover from disasters of all kinds. Primarily, people are familiar with us related to natural disasters, but any kind of an emergency we can respond to help a community or a state when the disaster exceeds their own internal capabilities to respond. So that's a primary thing that people probably think of when they hear FEMA. The National Flood Insurance Program is a rather small part of FEMA. In fact, it originated back in the late 1960s, and originally it was within HUD, Housing and Urban Development. It was only moved to FEMA after FEMA was created in the 70s, and has been there ever since.
All right. So flood is kind of the big one that I think I know real estate investors in particular get shocked with not realizing the property they are purchasing or the property they purchased is in a flood zone.
Yes.
Usually is what I've found, and it tends to be after the due diligence period expires, or there's some sort of like a kind of a thing.
Yeah.
And I know in particular, I've seen it where the seller didn't have flood insurance either because they had no mortgage, or perhaps they had an older loan that was before maybe the maps had been redrawn. Can you? There's a couple of things that I guess that come to my mind, and being an insurance broker doesn't really make it clear for me. But from a real estate investor's standpoint, when looking at a property, how should one go about? What's the best resource for them to determine if there is a potential flood exposure?
There's no substitute for just looking at the maps for yourself. That's what I always suggest. It's what I do myself when I'm looking at real estate to purchase. I certainly look at all the available hazard maps. Now, when it comes to flooding, uh, the best resource out there is the FEMA Map Service Center. You just do a search on your browser for that phrase. First entry that'll come up will be that FEMA website. On that website, you can access all flood maps for the entire country. We have all of the current effective maps on there. We have all the old historic maps, so you can look backwards in time for any particular community. And if there's currently a map revision project underway, and if there are any preliminary maps that are pending, you'll be able to see those maps as well from that website.
Got it. One of the things that I've never really fully understood is the different zones. I
Yes.
think when if you were to ask me to describe which zones which, I would think that if an A were one end and a Z were another end, that I could tell you what it were, or what it was
Yeah.
supposed to be.
Yes.
Can you give us any insight as to the different zones and how they came about as far as the different lettering and all that?
Sure. Yeah, the nomenclature we use for flood zones has changed a bit over the years since the 60s, but currently on the maps we're producing today and the bulk of the maps inventory that's out there now, you'll see what we call the special flood hazard area. People often think of that as also might call that the 1% chance floodplain, or more commonly known as the 100-year floodplain. All three terms mean the same space. This is also the place where you'll run into that mandate from lenders to buy flood insurance. So when you look at a FEMA flood map, if you're in a riverine type situation where rivers or streams, those floodplains, that special flood hazard area will have some kind of a designation that begins with an A. It might be just a letter A, it might be an AE or an AO zone. Those zones are that 1% chance floodplain. That's where that flood insurance mandate will come into play. If you're in a coastal area, you'll have both the A zones and a V zone. A V zone means velocity zone. It's a zone where you have wave action. It's also one of these areas where flood insurance would be required. On any flood map, you're going to see several zones several areas on the map that are called Zone X. Zone X means it's either in the 500-year floodplain or just something beyond that. Zone X is an area where there is no regulatory requirement to buy flood insurance. It's something beyond the 1% chance floodplain. You might also see some other zones, like perhaps a zone D. They're not very common. Zone D means not determined, it's not studied. Typically, you're going to see this on federal land, like Forest Service, BLM land, or some areas that are very remote and simply just have never been studied, usually because there's not much population density out there.
Got it. That's the most succinct answer I've been given for all those zones. I've tried to make it up, when I was trying to explain it to others, but that's good. So one of the things I mentioned, like when if you're a buyer of a property and
Yes.
you're looking at the seller's income and expenses, and there's no mention of any kind of a flood insurance policy.
Yeah.
And yet now you're borrowing money to buy the property, and the lender's going, "Hey, you need flood insurance."
Hmm.
Can you speak a little bit about the redraw of the maps and how that's working, or is it done? Where is that whole process?
Revising flood maps?
Yeah, but no, has
Yes.
that been when did that start? Was that, or I guess the most recent one was that?
Well, FEMA has a requirement to periodically review and update all of our maps, and we do this on a countywide basis. So FEMA maintains a priority list for each state of which communities are most in need of updating, and they schedule and budget according to that prioritization. Now that prioritization changes periodically as Congress adds new priorities or new emphasis on what areas need updated, modernized maps most quickly. And an example is about 10 years ago, Congress instructed FEMA to prioritize remapping all coastal maps in the United States. And we've recently just completed that. It was a multi-year project, but now every single county that is on the coastline in the lower 48 states has an updated map. So now that that is done, we might get back to our regular prioritization, which is typically based on what's the population, what are the anticipated growth rates, what's our current policy density. Those sorts of issues that you would normally expect would move a county up higher on a priority list to get a new map. Ideally, we would like to revise and restudy every community somewhere between 10 and 15 years. We don't want to go too much beyond that because we know there's a lot of natural processes like, channel evulsion and, the meandering of a river or stream, erosion that occurs, and then also development also alters the landscape and alters the flood risk. So ideally, we would be able to restudy every single county every 10 years, but the reality is that that would far exceed the actual budget we really have for remapping. So some communities experience a remapping cycle something more like every 20 years.
Got it. As far as the you mentioned the original FEMA and NFIP in the 60s and 70s.
Yes.
Can you explain a little bit about how that affects communities that enroll that are part of FEMA? Because is there not a community election to be part of FEMA? Is that?
Yes. Yeah, the National Flood Insurance Program is a program that communities choose. They have to proactively choose to be a part of and participate in. And they actually fill out an application. They apply for membership in the National Flood Insurance Program. Most communities did that somewhere about the time that FEMA produced the very first study and map for their community and for their county. So most communities have joined the program, and they did so somewhere in the 70s or 80s. Although there are still some communities here in our region that have chosen not to participate, and that is fine. There's no mandate that they must. There are some services available to their residents are just not available if they're not in the program. Number one being nobody within the community would be able to purchase insurance from the National Flood Insurance Program if the community did not choose to participate in the program. And there's also some other grant funding opportunities that are available only to participating communities.
Got it. And I think one of the things that I was I guess thinking about when I was asking the question was, my understanding is that part of the agreement when the community enrolls or opts into to participate in FEMA, they also agree not to issue building permits at a level below the 100-year floodplain, or is that my?
Yes,
right?
generally how the agreement works is that FEMA will agree to make flood insurance available to all the residents of, a particular city when they join, and in exchange, the city must pass an ordinance that specifies some minimum standards for development in the floodplain. So the development by FEMA's definition is quite broad. It's building houses or buildings, also roads, bridges. It's also even just grading or excavating or storing materials. All of those things are development activities that have an effect on flood hazard, and they would require the community to regulate those to some minimum specifications or better that FEMA has. It's within the National Flood Insurance Program. An example is if you're going to build a residential structure in a flood hazard area, you must elevate that house on a permanent foundation so that the lowest floor is equal to or higher than the surface of the water during that 1% chance flood, as indicated on our flood insurance rate maps. So that's one example of what these required building codes say. The idea is to try to manage that floodplain and minimize the risk and therefore minimize losses. So we require communities to actively manage those flood risks for their community in order to stay in the program. And the communities are periodically reevaluated or audited to ensure that they are in fact, they do in fact have a compliant ordinance, and they are enforcing that ordinance and actively managing that risk and trying to minimize flood risk to their community.
Got it. And I think one of the other things I've seen, and maybe you can speak to this, is when a property that maybe you're buying or you've been notified that is in the floodplain and requires flood insurance. I've seen it be where the structure may not be in the floodplain, but by just the four corners of your property, if there's a portion of that property that's in the floodplain, and perhaps it was built pre FEMA, there may not be an elevation certificate saying that the structure is not.
Yes.
Can you describe the process for how one would go about trying to confirm that they don't need the flood insurance?
Yeah.
Or they're not in the floodplain, I guess I should say.
Right. Well, for anybody who's thinking about buying property in the floodplain, it's important that they kind of understand the process of how the floodplain determination actually occurs. The lender is required to notify a mortgage borrower of the floodplain status of the property at some point prior to closing. Typically, that happens usually the day they're sitting down at closing, signing the documents. Unfortunately, that's what I hear often is that's the first clue that the buyer has that flood insurance is required, is when they're asked to hand over a policy. That determination is done by the lender, actually not by the lender themselves. They hire another independent company called flood determination companies to make that determination for them. This is typically an automated process. These companies use available online digital county assessor plat maps and the FEMA flood insurance rate maps, and do it. The computer does a quick comparison. If they see any overlap, it says you're in the floodplain, you need insurance. And as you just mentioned, quite often the reality is that a portion of the property may be in the floodplain, but the structure itself may well be out. And this is important in that is the key definition for the federal requirement to have insurance. It's the building, the envelope of the building itself. If any part of the building is in the floodplain, then insurance is required. So from time to time, you do see these, what I call false positives on this determination, where the computerized comparison sees an overlap in property boundaries, thinks it's in the floodplain, but if you actually look at the flood map, and you'll see that the structure itself is in fact out. FEMA has a process to address that for the homeowner. It's called a letter of map amendment, out as shown. The process of applying for that is to just simply obtain the form from FEMA's website, the letter of map amendment form, and include a copy of the flood map from the FEMA Map Service Center and a copy of your county assessor's plat map so that you can positively identify which property is yours. You send that into FEMA and you'll get back from them a letter stating that the structure is in fact out of the floodplain. And that official document from FEMA with the FEMA letterhead, that's the document your lender is going to be looking for to ensure that they're satisfying their regulatory requirements as a lender on, concerning the insurance of that building. The lender's going to need one of two things in their files for their regulators: is either an insurance policy or one of these letters of map amendment from FEMA.
Right, and you mentioned I got the different pieces of information you submit to FEMA was the application, the FEMA map, and then also the county map showing your property. But
Yes.
is there not an elevation requirement to prove that your structure is above, or how do you do that? Because I guess I was thinking
Well,
there's some sort of a survey requirement or something.
yeah, so that's another kind of map amendment that's available. The one I just described is one where the bank's determination company made an error in thinking that your house was in the floodplain when really it's out.
Okay.
The other kind of map amendment is another one that's even more common, is that somebody has a house that is inside the shaded area on the map that says it's the 1% chance floodplain where insurance is required, but they happen to know that their house is built up higher than the flood level. Say it was built on fill, or is built on a high knoll in the center of the property. In that example, that is where you can hire a surveyor to complete what's called an elevation certificate. And if the elevation certificate shows that the lowest adjacent grade to that structure is higher than the flood elevation, then you can also get a map amendment and be removed from the floodplain and removed from that mandate to buy flood insurance. To qualify for that one, the theory there is that if your adjacent grade is higher than the flood elevation, that during that 1% chance floodwaters don't even touch the foundation or any portion of the property. That's a standard they're looking for to grant one of those kinds of map amendments. The application process is similar. It's the same form. You need many of the same documents. The only thing in addition is you need that elevation certificate completed by a licensed surveyor. That's a state requirement that you must use a licensed surveyor when you're reporting elevations.
Got it. So we just talked about when a buyer usually finds out that they have a need for flood insurance somewhere close to the closing.
Yes.
How long would you expect it to take, assuming you had your survey in hand and you sent this off to FEMA to get an amendment?
Well, those map amendments, that process is managed by a contractor in Maryland. You'll see in the instructions that they're required to get a response back to you within 90 days. In practice, in my experience, if you send a complete application, and if we're talking about a single family, single lot, very simple, straightforward analysis, these often will come back in something more like 4 to 5 weeks. They're really pretty quick over there. It's considering the volume of these that they deal with on a daily basis.
Got it. So if all of these efforts do not prove that you are, in at least a zone X or better, and you do need flood insurance, NFIP is the National Flood Insurance Program. Is that the kind of the backstop for all? Can you talk a little bit about the marketplace?
Sure. Yeah, the marketplace has changed quite a bit in the last few years. Not that long ago, the NFIP that's all there was available. They were the only ones selling flood insurance anywhere, with the exception of some well-known companies that would specialize in commercial or larger catastrophic policies. But for the average homeowner or the investor looking at buying single-family homes, NFIP was pretty much the only game in town. In the last 4 or 5 years, we've seen a steady increase in the number of private insurance companies that are starting to sell flood insurance products. They very much emulate the National Flood Insurance Program in coverages because they're required to do so in order to meet that federal regulatory mandate for the mortgage lenders for protection of the mortgage, insuring the mortgage. However, the private companies don't sell to just anyone anywhere like the NFIP does. They tend to be somewhat selective. They like to sell in particular flood zones or just particular communities. Some of the examples I've been hearing about is some companies specialize in what we call unnumbered A zones only. We have others that specialize, that sell policies only in certain states. For the state insurance regulatory rules happen to be ones that they feel comfortable selling in, and of course they have the ability to decide to not renew a policy and just discontinue at any time they wish as well. And this is a complaint I've heard a little bit this year, is that people switched to a private policy a year or two ago, and then for no apparent reason, the company just chose not to renew the policy and just chose not to sell anymore. So, there's some pluses and minuses to the private sector policies. The big plus is that they're often less expensive. That's why consumers will switch. But you don't have that the guaranteed availability that you have with the National Flood Insurance Program. We will sell to anybody in any zone so long as you're in a participating community.
Got it. We mentioned, or we talked a little bit about some of the efforts you can take to prove that your property is not in a flood zone or one that
Mhm.
requires flood insurance.
Yes.
Beyond that, are there any other measures? I mean, I know I was talking with a client about could we build a wall? All these other types of things.
Mhm.
Um, are there any measures that you've seen property owners take that are recognized or successful to change the, I guess the requirement for flood insurance?
Well, the only way to, get out of the requirement for flood insurance is to literally lift your house up out of the flood risk by elevation, by elevating on fill. So if you're building a new house, I mean, that's is one of the reasons why so many new homes are built on fill in the floodplain, is so that they won't face that mandate to have insurance. Um, I guess the nice thing about that is if the homeowner chooses to buy the insurance anyway, it'll be much less expensive than if the house had not been elevated that way. Um, uh, Building a private flood wall is probably cost prohibitive because you would have to get it and be like a certified levy with a maintenance and operations schedule, and it would probably exceed the value of most homes. The cost of building something like that is simply sticking up a concrete wall with a plywood doorway, and it's not going to work. Because residential structures are simply required to be elevated by NFIP minimum standards. Now, if you're looking at a commercial building, if you're thinking about buying a commercial building in a low-lying area in a floodplain, now you have a little more options. Commercial buildings can be flood-proofed. Not always inexpensive to do, but it gives you more flexibility. Some buildings just, because of their purpose, don't deal well with stairs. You don't see grocery stores or supermarkets with stairways in the front. They tend to be at grade. Those buildings typically will get flood proofed. And so that just means you have to build the walls so that they'll withstand the hydrostatic force, and they got to be watertight, not allow water to come in. And then they have some kind of baffles or gates that go over all openings and doorways before a flood that'll keep the flood waters out. So in theory, the building will survive the flood without filling with water. So a little bit more flexibility there with the commercial building, but residential buildings, they just simply have to be elevated.
Well, that's good to know. I think especially for the commercial properties, that's where I've seen it, catch some of my clients off guard. It was at closing, that they found out about it, and usually it's one of the first things they want to talk to me about when we talk is, man, that flood insurance is expensive, and
Yeah.
so depending on your plans for the building, or I suppose even if you're looking at the possibility of selling the building, this is it has to either be dealt with or just recognized or disclosed, because it's going to be it's going to be an issue.
Yeah. If the prospective buyer is faced with that requirement to buy the insurance, I mean, that's obviously going to affect their calculation, and especially if it's very expensive, that'll it might have an effect on their perceived value of the property. I certainly have in this area in Puget Sound, I have seen quotes for commercial buildings that exceed $10,000 a year in cost, and that's just simply because they're older buildings built well below the flood level and just not up to current code, or there's some high risk element to them. Typically, they have a basement, or they're more than 2 feet below the flood elevation.
Right. Let me ask you this, and I don't know what the the right way to ask it is, because I think that there's all sorts of people and varying views. But I believe that insurance companies are ones to raise their hand if you were to ask the question, do they believe in climate change or global warming or whatever you want to call it, based on the claims and the severity and the frequency that they're experiencing. Can you speak to any kind of information or kind of a viewpoint from FEMA with regards to, are these increasing? Is the severity increasing? Is there um, any kind of a statement from, FEMA just with what experience, or is there any kind of a...
Well, I guess there's multiple parts to that answer. Certainly, while there's not like any official statements from FEMA concerning climate change or rising sea levels in particular, when you, certainly within our mapping program, and with looking at the need to increase mapping changes more frequently, simply because we see and we understand that sea levels are rising in some areas. We are seeing rapidly changing risk especially in Alaska, Florida. These are some areas where we see some pretty rapidly changing risk to flooding due to sea level changes. And in my readings too, in the insurance industry, I see widespread understanding that sea level rise and climate change is real, and they're anticipating those changes in the rating structure we're seeing already. Certainly, areas like Florida, we're seeing some companies are simply pulling out of that market, and flood insurance is just not available anymore. I also read articles saying that even just regular homeowners insurance is becoming less available and more expensive in some of these areas that are experiencing the effects of climate change. And it's not just those coastal areas. I mean, we're seeing changes in precipitation patterns, snowpack levels, and flooding in even the intermountain areas in the Midwest as our climate is changing. And the more rapidly it changes, I think the more uncertainty there is about risk. And I would anticipate we might see some more variability in the way that companies might be rating policies, just because of the greater level of uncertainty. As we see some of these more dramatic events that happen, such as Hurricane Harvey that affected Houston, or we see some of these larger floods like Colorado experienced a few years back from an unusually big snowpack, and large rain events on top of snow can produce these outsized flood events. So it's certainly a concern. In fact, I was just reading an article from the Union of Concerned Scientists concerning rising sea level and the risk in our coastal areas. Just simply doing a quick analysis of the amount of real estate and the amount of buildings we have within these low-lying coastal areas around the entire country, and projecting what sea level rise might be over the next 50 years. It's certainly, hundreds of billions of dollars of real estate at risk there that might be experiencing, much more damaging and much more frequent flood events. Certainly something that concerns me when I look at the long-term viability of our own program. And is something that we're going to have to address and face, that with this increasing risk, there's obviously increasing risk to our program and its health, and what might happen to rates in our program as well in the future. Is that's something that's at some point I'm sure my agency will need to address, if they're not already thinking about it now.
Sure. You mentioned Alaska and Florida, and those seem like they're pretty easy to point to as far as, kind of just in the eye of the storm. I'm wondering if inland, the different, are there regions that have historically not been prone to flood or significant storms that you guys have seen kind of a rise in occurrence or demand for FEMA?
Well, flooding is probably, it was FEMA. Well, FEMA certainly has said for years that flooding is our number one natural disaster that we experience around the country. And over 95% of all of our counties in the country have experienced a flood disaster. So it's one of the most widespread, most frequent, and most damaging, natural hazards we have in the country. And I'm most familiar with Region 10, where I live here, where I work, and have worked for over 20 years. So that's Oregon, Washington, Idaho, and Alaska. And even here within these 4 states, we have some pretty significant flood events and flood history. Washington probably gets more frequent floods than, say, Idaho does, of the larger ones, because of our typical, rainfall patterns that we've had. But yet, even in those drier those more arid areas like South Idaho, that 90% of the time you drive through it, it's a very dry desert. You wouldn't think of it as a flood hazard. Even they are experiencing, increases in flood frequency and size of floods. They're seeing changes in their weather patterns as we look back over the last few decades. You get seeing lesser amounts of snowpack on average, and greater rain events, total accumulation of rain on average. And so it has an effect, on a number of concerns for a state like Idaho, not only water supply, but certainly also, flood damage and that risk of flooding. So I don't think anybody's immune from these changes, but it is going to be variable from what we've seen so far. Some areas are being affected more rapidly or to a greater extent than other areas. I'm not a climate scientist, so I don't want to predict who's going to get the worst floods or who's going to be spared, but I don't think anybody's going to be spared from seeing some change, some effect.
Got it.
Yeah.
On just the I guess on a disaster, I know that FEMA shows up. What would you say to someone who said, well, if it happens, we'll just we'll get a loan from FEMA to fix, as opposed to buying the flood insurance that's available? Can you speak a little bit to how that?
Yeah, I think there's
what happens when somebody's in that situation, I guess.
Yeah, I think there's a lot of common misperceptions about what FEMA does during a flood disaster or any kind of a disaster. But there's typically some emergency aid available to residents that are affected, survivors from a flood event. You probably have seen news stories from Hurricane Katrina or Hurricane Harvey, where FEMA will provide a few $1,000s for emergency shelter, emergency food, to help the survivors get by until they can start the process of rebuilding their homes. Now, despite some people's expectations, FEMA doesn't pay to rebuild people's homes. We just provide some small grants that average somewhere between $2,000 and $4,000, depending on the event and the magnitude of it. But that's certainly is helpful, we hope. I mean, it's intended to help the people get back on their feet and get started. But if you've had a foot of water in your home and you've experienced $50,000 worth of damage from that small little FEMA grant's not going to cover that. If you have flood insurance, it will cover that, and you'll get payment pretty quickly. You'll get an initial estimated amount to help you get started on your repairs, and then you'll get the final payment later on down the road when you're closer to being done with the repairs. One of our partner agencies we rely on heavily to assist us during a disaster is a Small Business Administration. This is a source of the lending that many thousands of people across the country have taken advantage of to help them actually recover from a flood. So if you don't have flood insurance, you have uninsured losses, you can get a very low interest rate loan from the Small Business Administration. And they accompany FEMA on almost every large flood disaster. They're usually present. If it's a declared disaster, the Small Business Administration will be there and provide an opportunity to apply for it, hopefully get a very low interest rate loan. So that's really the difference. The choice is, if you have flood insurance, your losses are covered, minus your deductible. If you don't have any insurance, then you're looking at essentially getting a second mortgage on that property and paying it out over quite a number of years.
Got it. No, I appreciate you kind of taking us through that. Um, Scott, if we could, I'd like to shift gears here.
Hmm.
As I've indicated, I'm an insurance broker
Hmm.
by day, and I work with clients to assess risk and determine, what they can do in order to manage the risk. And there's typically three strategies we consider. One is avoid the risk.
Hmm.
Two is can we minimize the risk? And then the third option is can we transfer the risk? And that's essentially where an insurance policy comes in.
Yeah.
And so I like to ask my guests if they can identify what they consider to be the biggest risk. And just to be clear, I'm not necessarily looking for an insurance related answer, although that may be the obvious choice based on what we've talked about.
Mhm.
But I would like to ask you, Scott Van Hoff,
Mhm.
what is the biggest risk?
Well, the biggest risk, what concerns me looking forward when we're talking about the issue of flood insurance, is this changing of the sea level rise and the changing of the risk, especially in our coastal areas. Uh, this, especially when you think of from the perspective of a homeowner, somebody who's making a long-term investment, who might be in this location, in this home, or owning this property for a few decades. There's certainly maybe a likelihood, certainly an opportunity that there's going to be greatly increased risk and increased cost to that homeowner as a result of changing flood and changing risk conditions. Certainly, you see that at the time that FEMA updates a map. You often see people move from one zone to another zone because the boundary lines have changed or the flood elevations have gone up, and they're suddenly faced with a greatly increased cost of ownership for that property. And all too often, I see that, especially retired people, living in a retirement home, or can literally be priced out of their homes because of the cost of covering that risk, the cost of insurance. Um, this is something that does concern me, probably because we have so many, um, people in that situation in these coastal areas. The coastal areas attract people, especially in their retirement years, it seems, and I'm concerned about that increasing risk and people's ability to adapt to that financially, unless they think about it ahead of time and taken some steps to try to mitigate that risk and mitigate that potential for cost increase, in the future with map changes and changes in flood risk.
No, I love your way you frame that, because I think that is the it's the cost of the change. I think that's
Yeah.
really pretty much sums that up. Especially with the insurance, especially if you're later in life and you may be on some sort of a fixed budget or something where you're um, you're looking to live the good life and last as long as you can. You may not be able to budget in the additional costs, or so.
Yes, those are the heartbreaking stories that really are, that probably bother me the most. I try to spend the most time I can helping people. Is those the retirees on a fixed income that maybe have took out a second mortgage and now are suddenly faced with an insurance cost that they just didn't budget. And if it's a coastal waterfront property, it might be a very high insurance cost, especially for older homes. Some of these older pre-existing structures, in FEMA language, call them pre-firm houses. They get special pre-firm rates. Some people might know those as subsidized FEMA rates, although the term subsidized here is a little bit deceptive because subsidized does not mean cheap. It does not mean inexpensive. Some of these rates for these older homes, the ones that were built before there was a flood insurance program, sometimes these rates can be, many thousands of dollars a year, and that's cost prohibitive for some people. So
Okay.
that's a caution to use when thinking about purchasing one of these older homes in a floodplain, is that those subsidized risks, the subsidized policies, the so-called subsidy, is rapidly disappearing, and it's a result of flood insurance reform acts that were passed in 2012 and 2014, where Congress made stated the goal of eliminating subsidies and bringing all structures up to paying their full risk rate so that their premium they pay reflects a true risk of their individual property. So some of these properties are experiencing rates as high as 24 or 25% per year in the cost of insurance.
Got it.
Something to be aware of. Really need to talk to an agent. But I just, if I could tell every prospective a buyer of a house in a floodplain, I would like to encourage them to talk to their insurance agent and get some information on costs before making that purchase. Make sure you're fully aware of what you're buying before you buy it.
No, I would second that. It's there's nothing like the panic of somebody at the closing table when you tell them what the cost of the flood insurance is, and at that point they're already committed, and everybody's looking at them to sign, and
Yes.
there's a little bit of a, oh my God, what have I done? So good advice.
Yeah, those are the calls I don't like getting. Those panic calls by either the realtor or the home buyer, usually one of the two, and it's because it is closing day, and now all of a sudden they've getting this new information they didn't know before. You're in a floodplain and you have to buy this expensive policy, and that's not the time to be making a rational decision when you're already emotionally committed. You're in the process. You're just trying to finish. You're at the finish line, and now you get some critical information that, had you received that information, weeks before, you would have had time to, make a thoughtful decision, and you might have made a different decision on that purchase, maybe.
Right. Scott, where can the listeners go if they'd like to connect or learn more?
Well, probably some of the best resources we have some websites out there. The first is floodsmart.gov. You're going to find a lot of information there for the consumer, for the insurance agent, and for the real estate professional. We have different sub pages for each of those professions or those interests. You're going to get some good information about insurance and some ideas on how you might be able to mitigate the cost and lessen the cost of your policy by making some low-cost changes to your home. And then also for the maps, for doing your due diligence and searching out your flood hazard status. Again, that is the FEMA Map Service Center. That is another FEMA.gov webpage, but if you just search for FEMA Map Service Center, it'll get you right to that. You have the ability to search out any map in the country at that page.
Great. Scott, I want to say thanks for taking the time. I've enjoyed it and learned a lot, and hope we can do it again soon.
Anytime. Thank you.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.